All right, so we just hit 11 a.m. on the West Coast, so I'm going to go ahead and get started. I want to welcome everyone to today's webinar titled How to Position Your Company for a Successful Insurance Relationship, presented by LCT and Lancer Insurance. I'm Lexi Tucker, the Associate Editor here at LCT, and I'll be your moderator for today's event. I encourage you to ask questions during the webinar at any point in the chat box, and we'll try to address as many of them as possible after the initial presentation. So without further ado, I'm going to hand things over to Mr. Tim Delaney, the Senior Vice President of Lancer Insurance.
Okay, thank you, Lexi. Welcome, everybody, and thank you for joining us today. We're going to talk about positioning your company for successful insurance relationships in the transportation industry. I guess before we jump into it, let me say thank you to everybody at LCT. Lexi, Sarah, Martin, thank you for setting this up and for everything you guys do for the industry. So as I said, my name is Tim Delaney. I work at Lancer Insurance Company. I'm the Senior Vice President in charge of underwriting for passenger transportation, and that includes all sorts of different types of vehicles, charter buses, school buses, what we used to call limo companies, kind of passenger transportation of all sorts. Lancer is the largest insurer of passenger transportation companies in the U.S., and we've been serving the industry since 1986. My personal career over the past 20 years has been underwriting a few different lines of insurance at companies like AIG, Ironshore, and now Lancer Insurance. So I come to you from the underwriting perspective. Lancer is also my family's business, which isn't important for this other than to say they can't fire me. So I'm going to try and tell it to you like I see it. I'm going to talk about some things you guys should know and some things you guys can do to improve or begin a successful relationship with your insurer. Again, that is from the underwriter's perspective, who generally are the decision makers at most insurance companies. You may get some different views from your peers in the industry or your broker or some others. So I want to disclaim early on that all the commentary is my own. Some of what I'll say are some specific things you can do in your interactions with your insurance company, and others are more kind of cultural observations that us and other companies I know look at when they're deciding who's a good risk and who's a bad risk, and or less than good risk, and how to price those risks. To outline, I'll briefly talk about the current liability environment. I'll talk about the basics of what insurance companies look at when they're writing your insurance. And then I'll talk about some things that maybe aren't so obvious to you, but that are crucial to underwriting. I'll focus on two issues in a big way, which are drivers and technology, and then wrap it up for questions from you guys. So the current environment, in brief, the liability environment for transportation companies is a pretty bleak picture. After 4 or 5 years of rate increases, the insurance companies haven't made a profit in over 5 years, and the trends continue to get worse. Why is that? We could have a whole webinar just on that, but at a very high level, you have economic recovery. Unemployment rate is at its historically lows, or at least lows of the past 20 years as of today. And since about 2011, you've seen the economy ramp up, which has brought more vehicles onto the road, and which is more miles driven, which is, what drives insurance claims. But layered on top of that are a couple, issues that are working against all of us on this call. You have distracted driving, which is a major issue. Everybody I know has stories of, if you can go out on almost any road and sit there and watch people looking at their phones as they drive at, sometimes 70, 80 miles an hour. It's kind of an amazing trend. Rising medical costs and surgeries. A quick comment on that is, a lot of what we call surgery today is really in and out in a day. It's really cleaning up scar tissue. They send you right home, but it still costs as much as what they used to call surgery, and seems to play in front of juries to drive up severity. Use the word surgery and people assume it's a big deal. But a lot of times what they can do today medically isn't as big of a deal. The lawyers, transportation companies have always been a target for attorneys, the plaintiffs' attorneys, and that trend has caught some steam over the past few years. They have bigger limits, so it gets them more money than your typical personal auto case. And these lawyers they're better funded than they've ever been. They see suing transportation companies as a viable business and have dedicated themselves to it. So that they're getting better at bringing cases, and that drives up the costs, which we have to reflect back to the industry. Infrastructure decline, I think everybody's familiar with that one as well. One that might not occur to you as much as the increased cost of repairs, where as recent as 10 years ago, low impact to a bumper was a pretty cheap fix. It might be a few $100. These days, because of the advancements in technologies, a lot of bumpers have cameras and sensors, and just to fix that in a low impact accident can sometimes run thousands of dollars. And it's taken, the insurance industry has been slow to work that into the rates, but what it all translates into is higher cost of insurance. And those are only a few reasons. There are dozens of them. Like I said, we could do a full hour just on that. But the end result is any accident these days can become a big issue, right? So the big push for everybody should be to avoid them in the first place, which is an obvious statement. But when you really dig into the environment, it's more crucial than ever to understand. And it's not just because of insurance. It's good customer service. It's good public relations. It's really what I think everybody in the transportation industry needs to focus on to survive. You got to have that culture of safety, diligence, and discipline in just about everything you do. So from the underwriter's chair, some of that is pretty vague, right? Where it's, strive to be excellent, of course. But one thing that comes up in a lot of my conversations with operators is the issue of defensibility. Oh, excuse me, I was slow on my slide there. So defensibility is a concept that I think everybody needs to understand kind of well. So when we as insurers make a big deal about deciding whether a driver is able to drive or not, or our inspection tells us that there's some administrative foot faults in the driver files or maintenance files or documentation of things. Initially, they might not seem that relevant, to whether or not you're going to have an accident. So we have a lot of conversations about defensibility, and what that means is when there is a bad accident, the plaintiff's attorneys are going to come in and rip every single file, every single procedure, every manual you have apart. And to the extent your bookkeeping, your administration, and even having all those things isn't up to snuff, they're going to use that against you. They're going to say, look at all these faults, look at all these things they're doing. They don't care. And it's that culture, that not caring, that really led to this accident that injured their client. They're going to say you don't pay attention to detail, you ignore protocol, and they're going to throw it all at you. So from our end, a lot of times what you guys may see insurance companies nitpicking at, and it might seem like nitpicking, it's all in the interest of establishing defensibility in the event of a bad accident. Which I think is important for everyone to understand. So, all that said, I wanted to take a quick step back and look at, from the beginning, what are the insurance companies looking at? What information are they getting in order to decide whether or not they want to write your risk? And if so, what price would they write it at? Simple enough, 3 years at least of loss runs. Many insurance companies include more. We're not only looking at the claims and the amount, the dollar value of losses when we get those, but we're looking at what type of claim, Are there a lot of the same type incidents? Where did they happen? We look at has this company jumped around from insurance company to insurance company, or from different broker to different broker? That could be a signal of is the person 100% strictly looking for the cheapest deal, or are they interested in building longer term relationships? We look at the application. We look to see again, a lot of basic info: where you are, how much experience you have, what type of work you're doing, some basic licensing and compliance information. We complement that with our own inspection of your properties, your vehicles, and the operations. We look at MVRs, the driver records, which are extremely important. In the vehicle list, what vehicles you have, how old they are, estimated mileage. We also go out on our own and look at some things like safer data. I know a lot of people are diversifying their fleet and moving into buses. So to the extent safer is applicable to you, we make sure you have a satisfactory rating and there's no out of service violations. And we'll also go look at your website. We'll look at, social media, news articles, online reviews. And when we're doing that research online, we're looking to see if things like if your website, has martini glasses with, confetti popping out of it, or something like that. We're looking to see if, there's Facebook pictures of out of control partying going on in the vehicle. Things like that. And because again, when a bad accident happens, those are the things the plaintiff's attorneys are going to look to, very easily and effectively use against you. So when we have all that information, next I wanted to tell you about some key considerations that kind of flow over all of that. As I said before, we look for the culture of safety, that has to run throughout the organization. And when I mean everything from management, to dispatch, to maintenance, not just the drivers. There's certainly indicators of if dispatch is running people too long and too hard. We might figure out from an inspection whether the safety manager really feels empowered to do his job. A lot of it is some soft stuff, but the key message there is that it has to run from the top and it has to run through the entire organization. Some common red flags. A lot of them, I'm sure you guys can guess, but I already mentioned websites promoting or glorifying, dangerous behavior on the vehicle. Very high driver turnover is another one, but I'll define very later on because driver turnover is kind of an ever-present issue for everybody. Late reporting of claims, that's a big one. Hopefully everybody understands that one. Again, a lot of the same type of accident, which would suggest to us lack of training on certain things. So, we try to work with our clients when we see that to get somebody in there and explain how to fix the problem. So the trend in the world to diversifying fleets about getting buses is worth mentioning on its own because buses is a whole different ballgame in terms of compliance and liability. And a lot of people moving from the sedan world or smaller vehicle world up into the big coaches are dismayed by what the regulatory and compliance burden. You have filings, you have all sorts of different rules you have to follow. So if for those of you out there who already have or are contemplating moving into the bus world, just be aware of that. Team up, make sure it is a different ball game. Team up with your insurer, educate yourself on what the differences are. And, if your insurance company or anybody else has resources to help you get compliant and get up to speed, definitely avail yourself of those. There's actually, less insurance companies that will write buses than limos, I would guess. So Another tip might be to check with your insurer ahead of time and make sure they write buses, or even if they do, that they're competitive in that world. Because as your fleet mix differs, your risk profile changes, and the insurer you team with may make sense to actually change that. The shameless plug. I mean, we certainly write buses. We're probably the biggest insurer of charter buses, so we have a lot of resources to help people in that area. Affiliate diligence is another topic that comes up a lot. From your guys' perspective, I think this one is probably the most under the radar. From my perspective, it's probably the one I see growing the most quickly, growing the fastest, and I predict that within a few years, everyone will be more familiar with it because it's becoming a big issue. And what I mean by that is, over the past 10 plus years, a significant portion of everybody's revenues has become affiliate business. And what we see is varying levels of diligence associated with picking those affiliates. So, you say you farm a job out to a company and that company has a terrible accident. Most people probably don't realize the extent to which that can blow back on you. And how to prevent that there's no set recipe yet. But some simple diligence and things are a good way to start. You should have a file on your affiliates. You should make sure they have the same limits you have. You should show that you made some kind of effort to evaluate that they're a safe operator. And make sure that your contract with them says that they can't re-farm it out to somebody else, at least without checking with you first. So there's a lot of diligence in that world, or a lot of liability hanging out there that I'm not sure everybody understands they have. So we've begun an effort to try and educate everybody on that. And it's another topic that we could do a whole webinar on, but everyone should be aware that it's growing in importance. The last couple things on this slide actually get their own slide. The biggest challenge facing transportation companies and their insurers right now, in my opinion, is drivers. Unemployment is low. The baby boomers are aging out of the business, and the next generation doesn't seem to be accepting driving as a career as readily as those before them. There's a temptation out there to try and put what I would define as subpar drivers behind the wheel, just to go out and get, and be able to meet the demand that a lot of companies are seeing. But I really can't caution against that any more strongly. And here's where maybe I wander into my own opinion a little bit, so bear with me. But, if I asked a lot of operators, what you do for a living, a lot of guys generally respond, we transport people, I transport people from A to B. And I would propose that's wrong. That's a wrong definition. What you're doing as a transportation company is you go out and find and vet and hire and train drivers to move people from point A to point B. Those drivers have your hard assets in their control. They have your customer's experience in your control. They have your liability for loss in their hands. So basically the entire success and health of your company from almost every standpoint is in those drivers' hands. When you look at it that way, the goal, I think, becomes to have a business environment that attracts and keeps drivers, right? And I know easier said than done these days, but whether it's through paying more or differently, flexible hours, incentive programs, each market will have some solutions that fits it. But when you focus on it that way, when you look at your business that way, I think that's the way what leads to lower turnover, better customer service, less accidents, all the traits that define the more successful companies. When we're looking at new accounts, trying to gauge, those vague things like efforts in creating that environment, as much as it is a soft judgment, it's a big part of our underwriting. When we get in inspections, we do have conversations of saying, are there even though it's a really tough driver environment, are there hearts and minds in putting the best effort into it? So don't think we don't feel everybody's pain as an industry, the insurance industry. It's as much pain for us as it is for you guys. And, most companies are willing to work with you to get through it. I also want to talk for a second about what I mentioned before in defensibility as it pertains to drivers. As underwriters, we get a lot of requests to give an opinion about whether or not somebody should be allowed to drive. And every company has, somewhat different guidelines. And sometimes somebody may be asking about a driver who might be younger than the guidelines, older. They might have more violations or accidents or DWIs or we've even gotten requests for legally blind. And, oftentimes the requests come with a story explaining why, they're good people, or they're actually a pretty good driver, or they deserve a second chance. And a lot of times, I think in our interactions with operators, they can miss the point where it doesn't have anything to do with that person. It has to do with your company, you as the transportation company. If that person has a terrible accident with one of your clients in the car, you're starting off losing. You're already losing more than you would be. Whatever the weakness in that driver profile, even if that accident isn't their fault, the plaintiffs will immediately make that weakness part of the problem of why the accident happened. And it's already, the value's already going up. You're going to be liable to pay money that you wouldn't have otherwise. So in the hiring process, I know they're often very tough judgment calls, and we absolutely understand that. But I usually say, imagine the plaintiff's attorneys, imagine you're on the stand and the plaintiff's attorney's grilling you after somebody's dead in an accident. And if you think you can defend it to yourself in that circumstance, then it's usually going to be okay. So another philosophy I wanted to share with you guys when it comes to drivers is the driver world. It's not binary. A lot of times we all seem to get caught up in discussing what's a good driver and what's a bad driver. Unfortunately, it's not as easy as that. Most everybody, yes, there's some things that would disqualify you from driving professionally. Like I would suggest that DWI, is one of them. But those circumstances aside, most people are okay drivers most of the time. It's the 2 to 3% of the time that any of us are tired or distracted that really causes the problems. And how do you fight that? That's because those problems are at the margin. How do you bring them down? And we know we've proven that it's through, not just training, but constant refreshing, reminding, obviously incentivizing behavior with money can help. But even beyond that, it's just educating people on, the simple pitfalls of distraction and following too close and, all the different things, and then keeping it going, reminding them. So what works in that world? At Lancer Insurance, we have our own regional guys who go out and do a lot of driver training, but in the bigger world, there's a few different training regimens that transportation companies can buy almost out of the box. They have online portals, email reminders, tons of follow-ups and certificates and everything else you need. So if you haven't seen or know about those, I would suggest you look into them. Another thing, I won't go on too long about it, excuse me, but incentive programs, based on telematic driver scoring is a hugely interesting area for us. Every company is different, so there is no out-of-the-box solution for that, but we've seen amazing results for companies that have been willing to put in the time and tailor a program, to their company. In certain circumstances, we've seen the company save the cost of the whole technology package just by tracking idle time, changing routes that guys are using, and that's before you even get into lower claims payments, especially if you have a deductible. So that's one area to think about. And lastly, on that front, we've seen some success deploying personality tests at the hiring process. They're pretty simple tests. There's a couple different versions out there. They're generally pretty quick, and their aim is really just to tell you if a person is a risk taker or not. Which is obviously pretty relevant to the driving profession. So we don't have a huge amount of data to tell us how effective those are, but the early things we've seen are pretty encouraging. We back one called the Shig test, and we have some information on our website about that. But there are others out there. So especially if you're getting a lot of candidates that you have to turn down a lot, it might be one tool to help you decide, between them. So that's it for drivers. Another big issue is technology. And I'm sure a lot of you guys talk about this often. There's a lot of different options out there. I think most of you would be aware of that. These companies are pretty good at marketing, at least according to my email inbox. But from an insurance company standpoint, if you're going to have one thing, we'd love you to at least have cameras. Cameras can be used as a driver training tool, but most importantly, they can be used to stop a lot of claims that would otherwise run away on you. Yes, videos can sometimes show that your driver was at fault, but at least in those circumstances, we know what we have from a claim standpoint, and we can get it settled quickly. Hopefully avoiding years of attorney fees and experts and, uncertainty on all of our balance sheets. The way the environment is now, it's getting pretty close to where in the not too distant future, I could see insurers starting to take a pass on companies that don't have them. But again, in the big picture, it's not just about insurance. It's about management. It's about competing. It's about being the best company you can be. So, I say that I would say that companies that don't embrace technology in the long run aren't going to be able to survive. And I, qualify that with it's not just about insurance. With that, you couldn't really talk about technology without, mentioning some of the things on the horizon. One I'm going to importantly not dwell on is autonomous vehicles that are going to put us all out of business. That may happen someday. All I would add is that we try to follow it pretty closely here at Lancer Insurance, and I think we have some time. I think we all have time, to make some money. And from what I hear, looking at our own business and from talking to all of our clients, is business is actually up. So at least in the medium term, I think there's time for us all to make some money. But what I would say about what's coming next is, I think everyone knows what the basics of telematics are. Measuring where a car is, how fast it's going, how hard it's turning, things like that. But the sort of next wave of that is, one, driver scoring, which the beginnings of which are kind of out there in the world already. I've seen, using those scores integrated into an incentive program for drivers. And the few companies that are that far ahead, we've actually seen have dramatic results. So everybody should know that. And another thing is this is, further out on the leading edge, where some of these new systems actually have live in-car feedback to the drivers. So through magic of video and the intelligence behind it, if you close your eyes or look at your phone or get distracted in any other way, this thing is going to tell you, look up, or wake up, or it's going to beep at you. Those types of systems could be game changers, especially when you integrate them in vehicles that have all the other wonderful things that are coming out, like automatic braking and blind spot detection and lane drift and all the other things. So the technology is advancing quickly. The overall message from our end is embrace it and use it, because things are changing fast. And the further behind you are, the tougher it's going to be to catch up. That's it on technology. One thing that's important to having a successful relationship with an insurance company is not just their evaluation of you, but your evaluation of them. You want to make sure that they're acceptable to you as a business. You look at things like, do they have enough money to pay claims? Because it's important to remember, many BI claims don't settle for a lot of years. So is that insurance company not only strong today, do you have confidence they're going to be around in 5 to 7 years to pay that claim when it finally comes due? You want to make sure that your insurance company knows your business. Are they going to cancel you if you grow by 10% or, some other? Are they going to, are they a real partner? Are they, if you're a limo guy thinking, but 5 years down the road, may envision yourself with buses, are they a company that also writes buses? You want to think about the long-term fit between the two of you and whether they're a real partner. One thing is, have they been serving your industry very long, or are they a new player? Are they one that's popped in and out? All good things to know. And you can, speak to your peers and brokers and everyone else and get a pretty good background on most markets. And probably the most importantly is, do they have a good claims department? When you pay your premium, that's what you're buying. You want to make sure that they have a good reputation, that they're responsive, that they're not, just giving money away out of, either apathy or incompetence. So those are all important things to think about. And, I know nobody on this call, at least, will have any claims. So one other thing to think about is value-added services. What do they offer? Some offer a lot, some a little, some none. But the only, advice or comment I'd make out of it is, for any operator, almost of any size, to be able to learn from the insurance industry's experience with thousands of operators over time, there's value in that. So to the extent it's available to you, make sure you take advantage of it. Make sure you get everything you can out of it. Final thoughts. Information is key, right? Another vague statement, go the extra mile. But what I mean by that is, try to get your underwriters as much information as you can about your company, right? Beyond the simple things that we laid out in the submission. I know that, most people are proud of their company and they run their, company with enthusiasm and pretty well. So be proud of all those things that you guys do to be safe and smart, and, write it up, whether in memo format or email, somebody, something to pass along. Because, besides, underwriters feel better with more information. That's a true statement. So it's helpful from that standpoint, but even just making the effort to go out to say, hey, look these are all the things that we're doing, that I want you to understand as my insurer, because I know it's relevant to your risk as well as mine. So anything you can provide outside of the normal channels of information we receive, I would recommend you do that. And along the same lines, try and get to know your underwriter, if you can. If they're close enough, maybe get into their offices for a meeting, or even if you just go shake their hand at a booth at one of the trade shows. But those personal relationships can do a lot. They build trust. And I know, like, in the age where none of us wants, phone calls or anything else, I don't fully subscribe to that. I think meeting everybody, having face-to-face, having each other's direct contact information, still counts for a lot. And, well, at least it does for me. Further along the same line is, I'm sort of preaching to the choir on an LCT call, but, make sure you're involved in the industry groups. Keep in touch with your local peers, but, as much as you can to the national peers. See what they're doing. And as it pertains to insurance, ask them who they're with. Ask them about their experiences, if they've had claims, if they have services that were helpful. You can't just depend on, your broker or reading about things. I think the best information you're going to get is from everybody else in the same business. Lastly, transparency. Again, a lofty ideal to aspire to, but I mean it in the context of when you have interactions with your insurance company's claims department or, the safety and loss control guys. Try to be, make sure you are open and cooperative with these guys. Often on the claim side, it can become a little emotionally charged depending on what the particular case is. But try to make sure you remain calm and professional. And in the safety and loss control side, you guys would be shocked at how many times guys try to hide, they'll hide vehicles behind the building or not let us see certain things. And, the more you shut down, it is a little bit of a red flag. So almost in addition to what we see in our inspections and interactions, there'll be commentary. The guy was very open and cooperative. And when we see that from an underwriting standpoint, that's a huge plus. At least you're starting on a baseline of somebody who wants to work with you. And from the claim standpoint, we might not always agree on a claim, but an emotional charge is perfectly fine. But you just want to make sure from our end and your end that communication is the key, transparency in all things. And we do appreciate it, when we get that. The last thought I'd leave you with, in all these issues, whether it's insurance industry results, the TNCs of the world, or the technology applicable to all the vehicles, or usage-based insurance, or autonomous vehicles on the horizon, the pace of change just continues to astonish even the most forward-thinking people in both insurance and transportation. I don't expect that to slow down at all. If anything, it's only going to continue to accelerate. So all the things that we say here are only a slice of it. It's really, stay in touch with all of your partners, stay educated in your business, make sure you're very, very diligent in picking partners in any of these things, technology or insurance. And the more you do all those things, if you want to be successful in your insurance relationships, make sure you're communicating them with your insurance company. So that's my pitch. Thank you guys very much for your time. I think we'll be opening it up to Q&A, but
Yes,
before we do, if anybody, has any questions, beyond this call, my contact information is here on the screen, and feel free to reach out to me anytime.
Excellent. Thank you so much, Tim. That was some really great information. So I'd like to remind people that if they do have questions, you can go ahead and click the question box and fill it in, and I will try to get to as many as I possibly can before the hour is up. So our first question is kind of a two-parter. It says, is Lancer going to reduce the age requirement for drivers, and how old is too old to drive?
Well, it's a good question. The age of drivers is one that probably comes up the most, and probably the most on how it applies to older drivers. Are we going to reduce the age? First, I should respond to that by saying, we don't make hiring decisions, is the simple way to say it. We can give you an opinion on whether or not a driver fits our appetite for keeping you insurable, right? It's still your decision of whether or not to hire or fire somebody. It's depending on the circumstances, it might be something that leads to ending our relationship. On the age issue, data tells us that drivers with very little experience, which would be on the younger side, have more claims, and there's science that backs that up. That people under your brain's not fully formed until it's 25, and risk-taking behavior that we would all associate with teenagers is actually neurological, and there's all sorts of stuff to back it up. All we know is what data tells us over the last 30 years. And we can generally say around 24, 25 is when the experience starts to clean up. On the older issue, or the other end of the spectrum, it's a little bit different. Everybody ages differently, right? So there's going to be people who are in great shape at 90 who all of us would say, why wouldn't you let them drive? But it jumps back to the defensibility issue. And in circumstances where older drivers, and again, I can't draw the line of where exactly to define older, but I can tell you in one case, a plaintiff made a big presentation about the physiological declines that happen in the population after 75. And, those declines include you can't see as well as at night. Your reaction time slows significantly. So once you get up above there, if there is a bad accident, they're going to use those against you. So you're going to be sitting in a chair defending. Imagine a couple people are dead, and the plaintiff is saying, you put this family into your vehicle, with a 79 or 85 or 92-year-old man driving the car, knowing that his faculties weren't as strong as the general population of drivers. So, those are just a couple things to think about. The answers to the questions are, we don't really have any plans to change our guidelines, but depending on who we're working with, we do go outside those guidelines all the time, depending on the client. We try to work with who makes sense and what kind of training they've had and what kind of business, what kind of work they're going to assign that driver to. Is it daytime? Is it close? Or is it, overnight trips across the country?
Excellent. All right. Next question is, what is the most difficult type of luxury transportation vehicle to insure and why?
I would say right now is probably what we all refer to as party buses. In our world, we refer to it as perimeter seating buses. And, those vehicles, they just by name tend to be rolling parties where everybody's standing up, and, there's been multiple incidents of people falling out the doors and bumping into each other and smacking the poles and smacking each other. So the claims, and you know what, it's probably worth stepping back. So in the history of luxury transportation industry, you used to have stretch limousines, right? Many years ago. And everybody, knows images from the movies of, champagne and drinking in the back. And it was all great. And, the reason stretch limos didn't get the same scrutiny as perimeter seated buses do now is because everybody was sitting down, right? So now when you take a party and put more people in a room, like there's no seatbelts and there's nothing in between them, and then layer on, the drinking and partying and risks, that just come with that, even, standing in a room, it just makes it that much worse. So the manufacturers went, and especially when Uber hit and everything else, a lot of people ran to those vehicles as a great source of revenue. I've been on them; they're great. I mean, it's a lot of fun. But the incidents, the accidents, and the liability for them poured in so quickly that as an insurance industry, we had to retract considerably because, our losses, you couldn't get any reinsurance, and it was just a nightmare. So, yeah, I'd say that's the toughest right now.
Excellent. And then as more operators are getting into the motor coach space, what do you recommend they look out for in terms of insurance?
Well, depending on what you're going to do with them, the first thing to know is you need higher limits. Full-size coaches need $5 million. So a lot of limo operators are used to having $1 million or less. And so the bigger limits attract, bigger sharks in a sense. I would say from a regulatory standpoint, most guys who operate limo companies might not be familiar with DOT filings and, the electronic logging devices requirement that just went into effect. Driver qualification files and drug testing, that's a little bit more of a rigorous process than it is with smaller vehicle drivers. It's a lot of stuff. Getting inspected by the feds can happen. That information is public. So from if for some reason you had a bunch of violations, that hits your safer report and people can see that stuff, which is reputational risk as well. So it's really a whole host of, it's a bigger ball game. It's much higher stakes. If something goes wrong, in the simplest way, there's more people on it and more money at risk, which attracts, worse or better attorneys. And if you don't have everything in that whole chain, administratively, regulatorily, service-wise, if you don't have all of that buttoned up very tight, when something goes wrong, the plaintiff's attorneys have a lot more to pin you to.
Excellent. All right. Does anyone have any other questions for us? Okay, it looks like we are good to wrap up.
Okay. So if anybody, let me just say, if you do have my email on the screen there. So if anybody has something they're embarrassed to ask or wants to ask something offline, feel free to reach out to me, whether you are insured or not. Happy to help.
Excellent. Well, I want to thank you, Tim, for providing us with some of your expertise today. We really enjoyed it, and it seems like it was really helpful.
Okay, thank you.
All right, guys. So at the end of the webinar, you'll receive a short survey. If you could please take a few minutes to fill that out so we can continue to improve. And I also want to mention that this webinar will be available on demand on the LCT website under the More tab, where you'll find a link to the video portion of the site. So thank you all for attending, and hope you had a great day.
Thank you, everybody.
Thank you. Bye.